Hey there, my name is John Stevenson. Welcome to the Guaranteed Retirement Guy Show. We're going to be talking today about the best fixed indexed annuity rates right now. All right, so as a fiduciary, I have a responsibility to show you everything. I have access to thousands of options. On this video, though, I cannot show you everything. There's so much, okay? I specialize in annuities. That's all I do. I live and breathe annuities. But when it comes to fixed index annuities, there are only certain ones that I recommend that are good, that pay out like they're illustrated, okay? And so I'm going to show you those. I'll also show you the income rider that are attached to these annuities. If you're looking for lifetime income, we can absolutely do that, and we can lock in highest lifetime income. So, but in the beginning of this video, we're going to be talking specifically about the best fixed indexed annuity rates. Okay, so I'm going to share my screen and we'll go over those options. All right, so let's take a look right now. So I just threw someone in here. They're from South Carolina. They got $500,000, and they're just looking for market protection. They want growth, and I also let me just look here. Let's see here. Let me just throw in one index. Look at all the indexes here. There's a lot of different indexes. Okay, and maybe you have a certain index that you like. Okay, we can actually absolutely do that. Now, when I'm recommending this, I'm usually going for an S&P 500 play. Okay, and I'm usually doing it with a company that is known to keep their rates pretty consistent, because I want you to have growth. I want you to have decent growth, and I want it to be something that when I'm illustrating it, I want it to actually happen. Okay, because I could sell you something else that'll give you more commission, but it's not going to give you a high payout. At least that's what I've seen in the past. All right, so PIMCO. PIMCO's a good one. It's owned by Allianz. So you go balanced, see what there it is. All right, so Global Atlantic has some of that. Well, look at that, 335%. You got 2 year. They're measuring 2 years. So if you buy this in March 1st, at the end of like March 1st, 2026, then March 1st, 2028 will be how long they measure it for, and then they will credit your account with that interest. Okay. All right, so I'll go down. All right, it's Global Atlantic. All right, let me pull in Allianz, which they actually own this. So I'm just curious what they're showing. All right, Allianz. Well, okay, so I guess they're not showing the balanced one. So fine. I will get rid of that one. And let's see what kind of PIMCO they do offer. All right, so I'm going to pull this in. Let's just see at this particular one. They're showing Morgan Stanley. They're charging a fee. So when you have a bad year, you're still being charged a fee. And then they show you this huge growth. Look at this. Yeah, don't bank on that, okay? All right, I'm going to go in here, see allocations. See if this particular one gives you the PIMCO. S&P futures, live since 2010. So when I see these newer ones, I don't usually like them. I like ones that have been around for a while. So S&P 1957, yes, that's decent. But they charge you a fee for that. I can get you more growth in the S&P in a different product, okay? But this, sometimes people would push this. All right, S&P, all right, here you go. PIMCO, balanced participation rate. So they're giving you a 75%, which gives you only 3.83. That's not very much. So they have other ones that are better. So, but that's with the PIMCO. Anyways, you can see some 5-year options. This is what's illustrated, and it's showing you these ridiculous returns on a index that's been live for a year. So, yeah. So when you're looking at the best fixed index annuity rates, choose a company that's good. Choose an index that's good, and it's easy to get confused because you'll have advisors that just pick anything, okay, from any company. And then I have people that reach out to me and they're like, this is not done what they illustrated. I'm like, yeah, it's just because it wasn't the right index and it wasn't the right company. So it looks good on paper, but I want you to come back to me. So what I will do is I will show you Delaware and Lincoln Financial are probably my favorites when it comes to S&P growth. Okay. Just because they have a habit of keeping their participation rates and their cap rates pretty high over time. And that's important when you're illustrating these returns, because then it actually is, it's real and it's more likely. All right, so here's what it looks like. This is a no-fee product, so if the S&P dumps, forever, recession forever, which is not going to happen, but if it does, then your money just stays there. All right, now, if you get decent returns, they're only giving you 55% of it, but they're real, okay? And you can see over 10 years, it's almost worth $1.2 million. If this is an option, I would absolutely feel comfortable selling you because they're not giving you all of it. They're buying call options associated with the index, and they're giving you only 55% because there are years where they can't exercise these call options. So they need to make that money back, the money they spent on that premium. And so that's the cost of protection, because when the market's down and they can't exercise those call options, they're not making any money, but neither are you. But you're not losing anything either. So you notice after a couple of years, it grew, it grows, and then it kind of just sits there. See 582 and no growth. It's 582, but then it starts growing again. So now it's like 674. You see, so it keeps on locking the gains in over time. So this is just one company. Okay, I like participation rates, and I tell people a lot. I like the participation rates because if I look at a cap of 11%, that's not bad. But look at the overall; it's not as high, 8.56 versus 8.93. So you look at that and say, well, it's just because they're capping you at 11. So you do better when you're having a participation rate because you're on the good years, you're getting higher than 11%. You see what I'm saying? So still decent, but you're missing out on some returns. It's not as high as you could have gotten. So I do like par rates. So the reason why I'm showing Delaware is because they have a habit of keeping their rates pretty consistent year over year. And I like that because I don't want you to get stuck in a product where the company lowers their rates by half after buying it. All right, so Lincoln is another. They're pretty similar. Let's see what they are offering. 82%, but that's over 5 years. That's the fine print there, which means if you get 3 years where it's really good, but then 2 years where it's really bad, and at the end of 5 years, you only get a really small amount of earnings, you're going to be mad. Okay, so I recommend when you buy these, do a 1 year reset so you get more compounding periods. Okay, so if I look at this and say, okay, well, that's the 5 year, 1 year. What's the 1 year? Well, look, 55%. See, so it's very similar to Delaware. They're just an older company, so that's not bad. You absolutely could do this and do very well with them as well. And I've got clients with them, and they're doing quite well. All right, so now we'll look at Gillico. Gillico is known for keeping their rates pretty constant too. Their participation rates, I don't think are as high. No, so it's like 45% participation rate. It's not bad, but it's just not as high as what you can get with the others. And they got caps of like 10.5, so that's not bad. See National Life, see if they come up. Sometimes they come up. I don't see them. Midland's not bad, but I just haven't seen their resets on those. I haven't seen them very high compared to others. All right, so National Life, Southwest, Life of the Southwest is another name they're under. Life of the Southwest. All right. Yeah, they're not even pulling up. Yeah, I'd have to pull up another screen on that to show you those. But they have caps too. Never seen them with par rates. And their caps are usually around 9 to 11. So they're not bad too. They're old company, very good company. But if I'm looking for highest rates, I'm usually looking for just better participation rates. All right. Global Atlantic is also known for keeping their caps and par rates high too. Do they give a par rate on any of these? Let's look. They will on other indexes, it looks like, and not for the S&P 500. Okay, yeah, I'm not seeing that. All right, so, but they're good too. Their cap is 11.5. That's not bad, but their account fee is like 1.25. So, but it's not bad. They're a good company too. And it's only a 7-year surrender charge period if you want to access your money sooner. So that's good too. So I work with over 70 carriers. I'm showing you specific ones that I know have a reputation of keeping their rates pretty consistent year over year. And so I don't want you to get into something with another carrier that may be good for income, but may not be so good for growth, right? There are carriers that I absolutely recommend for income, but I do not recommend for growth. Okay, so if I was to go into a fixed index annuity, best fixed index annuity with an income rider, that's different. Totally different story. Okay, same $500,000. Prudential. Absolutely. Highest lifetime income starting next month, $32,000 a year. Okay. If I wait 5 years, though, I don't know if it's going to be Prudential. Okay. No, ClearSpring, best fixed index annuity with an income rider. Okay. $50,000 a year. Okay. If you want a little bit older company, Corebridge, $49,000 a year. Okay. F&G, you got all these different carriers. Look at here. Global Atlantic, they got some decent growth products. But it looks like their income products aren't too bad either. Okay. Nationwide New Heights, That's pretty decent as well. So, but and the New Heights Select does have some indexes. And if the index does outperform this 9.5% that this income benefit is getting, then you actually would get a higher income on this. But I've never seen it happen. It could happen, but I've never seen it happen. So again, stick with the guarantees when you're going with income. And if you're looking for a fixed index annuity with the highest growth, we've already gone over those, and hopefully you can kind of see why I favor the participation rate over the caps. So there's a lot of options out there, and there's a lot of reasons why advisors will push a product over another. And unfortunately, it's for unethical reasons. Unfortunately, it's because they got to meet a quota, or they got to get this trip, or they got to make some more commission. And so this product offers them more, or whatever. Okay, you got to be aware of this. And I know you probably are, and you're probably worried, and you just got to look around and kind of decide who you want to trust. And I can't tell you to trust me. You can just watch my videos, and if you feel like I'm sharing as much as I can, then reach out to me, because if you are looking to purchase an annuity with me, then I would love to help you. And so I tell people, if you're looking for my help, then book a call. There's a link below this video. There's a link on my website, johnstevenson.com, and I'd be happy to share with you what I would recommend. And this is based off of years of experience working with different companies and different carriers and seeing different products. And also, I want you to be happy in 5 years. And if you happen to come up to Lake Tahoe to visit me, then I don't want you to want to punch me in the face. I want you to be happy that you bought the right product and that you were, pitched the right product. And of course, I have no control over what these companies are going to do. I don't know if they're going to change their participation rates in a very bad way next year. But what I can do is share with you the best advice based off of my knowledge with these companies, my experience with these companies, and knowing that really means all the difference. Okay, I'm not motivated by the highest commissions. Yes, I'd love to sell you the highest commission product, but I want you to have the best experience so that you'll come back and that you'll, of course, send referrals. So I hope you can feel that sincerity and that honesty, because that's more important than anything when you're looking for advisors and you're looking for fiduciaries and you want to make sure you're getting the right advice. And it can be really exhausting when you're meeting with people and you just don't know if they're sharing with you what's best for you or not. And sometimes they're sharing what their broker dealer tells them to do. But again, it just comes down to what's best for you. So hope this helps. That's all I'm trying to do, is share in this video what is the best. And then of course, if you want my help, please reach out. So hope you enjoyed the video. If you do, like, subscribe, share, comment below if you got questions. If you want help, if you want to know what annuity payouts are for like income or other scenarios, go to my website, johnstevenson.com, and you'll be able to see all of the payouts. And then if you want, you can reach out after that. So thanks again for watching, and we'll see you next time.